I'm just going to, shift gears and look at the markets right now. And the top gainer, in a sense, is Tata Consumer, Balrampur Chini, and Titan from the FMCG basket. Ajay, we're looking at data on Friday, and we looked at which are the best Nifty 50 gainers for FY23. I'm not surprised why ITC is up there, but what surprised me was HUL and Britannia are amongst the top gainers for the Nifty for the year gone by. Now, the year gone by was marred with inflation. The year gone by was marred with companies not able to increase prices because of high inflation. There was a huge challenge in terms of volume growth. There was a huge challenge because of rural growth. But markets have given a thumbs up in last 1 year to Britannia, ITC and HUL.
See, the fact remains that if you look at a longer term scenario, two things emerge. The India will eventually consume these products, right? It may happen this year, it may happen next year or 2 years down the line. Number two is the stickiness of investors. If you look at the HUL investors, particularly, they're very sticky investors. They don't sell the stock, or like Nestle, they don't sell the stock. So what's really happening, Nikunj, is really the floating stock in these companies is going down year on year. As people add the portfolio, that stock disappears from the market. So these are now stocks more than fundamental. They are demand and supply. If a large customer wants to buy 100,000 shares of a Nestle, it's very difficult to do a trade of 100,000 without changing the price. So, so the trick is the fact investors saying, among all the uncertainties, we know three things. These companies will not dilute capital. They are very high dividend payers. Nestle does 90% of 95% of the cash flows goes back as dividend. So you're going to get dividends. They're not going to dilute equity. Governance is not an issue. Their product ultimately will file resonance with 1 billion people. Now, when it happens, we don't know. But why not load up the stock compared to a Mahindra where the vehicle may or may not work? So if you look at the relative market scenarios, these are perhaps the safest bets for any investor group and dwindling supply of free shares in the market. Nobody sells these shares at the end of the day. And you would know people come on the channel. If they hold, the grandfather has bequeathed them and the grandfather bequeathed to the grandson, and it goes on and on. So I think you will see these shares continue to have traction, continue to find resonance in the investors because it's a much longer term story people are willing to stay with, high dividend. And you can just imagine a scenario, okay, 3 years we have very bad growth rate. But ultimately, if those 800 million people who can barely afford food grains today, some point of time come into the system, your assured legacy of leaving stocks for your family, children, trust is these stocks. So these stocks have more relevance not from the current performance context, but from a longer term investment portfolio choices for investors. If you're building a trust for your corpus for your grandchild or a son, this is the place to go. And the dividend accumulation is phenomenal. So all works well for most long-term investors in this stock. And that is why as floating stock goes down, Nikunj, you will find more and more growth story coming, nothing to fundamental, but purely the number of shares are dwindling in the market.